please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good evening, you're watching CNBC TV18 and this is After the Bell. Straight to the trading action of the day as always, and it's been another day of volatile trade on the last street. A last hour dip pushed the benchmark indices into the negative territory. The Nifty breached the 10,700 mark and ended 39 points in the red. The Sensex also ended 74 points in the red. Bank Nifty slightly outperformed with gains of 37 points. Mid-caps, however, continued to underperform. The index ended with losses of more than 1%. Anuj Singhal joins us with a wrap of today's trading action. Then, Anuj, the pain in mid-cap continues today.
Well, once again, volatile day for the market today, especially if you're looking at the mid-caps. And that's been the market's message, actually, that perhaps you need to get out of mid-caps, you need to get out of leverage and move into safety of the large caps. Second day of 5 to 15% decline in select F&O stocks. IT stocks also saw some big sell-off in today's trade, led by HCL Tech. Big sell-off, in fact. Infosys and Tech Mahindra also down. Other index losers today included names like L&T, Kotak, after that big move yesterday, and Eicher Motors. While on the gaining side, you had names like Sun Pharma, Bharti Infra, and NTPC, and a couple of big banking names like ICICI and Axis Bank and Tata Steel also gained. Stocks of the day, HCC was down 25%. Indigo and Jet Airways, after that howler of a number from Indigo, both these stocks were down quite a bit. And some big losers today, Siemens, Just Dial, Ajanta Pharma, Biocon, Century Textile. All of these are actually non-index large caps, or most of them are. So big sell-off is what we had in some of these F&O names. Looks like the market is going through one of those phases where it's correcting the excesses. So the mid-caps are underperforming the Sensex and Nifty by quite a margin.
All right, Anuj, thank you very much. So a very volatile day of trading today, but moving on. InterGlobe Aviation hit an air pocket in today's trade, days after the company reported a weak set of fourth quarter numbers. Lack of management disclosures on declining yields, on compensation from Pratt & Whitney, and on the future leadership has clearly spooked the stock even further. InterGlobe shares tanked over 10%, taking all the other aviation stocks down with it. Sonia Shenoy is here with more details on this story. Sonia, InterGlobe Aviation is taking it on the chin again today.
Well, thanks a lot for that. You know, the one thing investor community has a very low tolerance for is low disclosures from the management and lack of clarity or lack of transparency. And that's pretty much what happened with the InterGlobe conference call yesterday. Now, as we saw, the stock fell about 15% in one fell swoop because the investor community just did not get any reasons for a whole host of issues that are plaguing the company. So it started off with questions on why the yields have fallen. Remember, the yields for InterGlobe have fallen almost 5.5% on a year-on-year basis. This is the highest fall we've seen in a very long time. This despite InterGlobe being a market leader in various metro routes. Now, the management just purely said that, you know, yields are on a downtrend for the industry as a whole. Repeated questions were asked on that, but they paid no heed to that. Apart from that, you know, the Pratt & Whitney engine issue. Remember, there was that grounding of planes issue for which Pratt & Whitney, the engine maker, was supposed to make good some of the losses and compensate to Indigo. Till now, we don't know what the compensation amount is, and even after repeatedly asking at the conference call, the management said that they can't give us any clarity on that. Apart from that, you know, there was no explanation on what the future leadership would be, who the new CEO would be, no talk of Gregory at all, whether he would be taking over as CEO, etc. Also, you know, no talk on what the future strategy would be. There were just broad statements on how the growth for the company would continue, etc. No clarity on the SEBI probe, no other details on why the profits of 100 crores included a financial income of about 248 crores. So actually stripped of that, it's an operational loss. Quickly, I want to tell you what brokerages are doing. Most brokerages have cut their target prices on InterGlobe Aviation. Credit Suisse has cut it from 1650 to 1575. IDFC has cut it from by 12% to 1293. Motilal Oswal says there's very little room for upside, and Citi has cut it from 1600 all the way to 1240. Back to you.
Thank you, Sonia. So a lot of nervousness on the InterGlobe Aviation stock. Now, there was another stock in focus today, and that was PC Jewelers, which recovered from the day's low to end over 10% higher in trade. This after the company's MD and CEO Balram Garg told CNBC TV18 that he had not received any notice from any investigative agency, nor had he been questioned by the CBI. He also clarified that the promoters of the company would not be participating in the share buyback. Listen in.
No question, nothing, and no, nothing, no rate, nothing, no, by any messages.
Has SEBI reached out to you all at all in terms of the kind of stock fall that we've seen since the start of the year for the company?
No, nothing, not yet.
You haven't even reached out to maybe a couple of your investors?
Actually, no, we have not reached out any SEBI right now.
I'm sure that you're also wondering where this is coming from. I mean, if you can give us some sense, what are the origins of this? There was the news channel which carried this report about the CBI questioning, etc., was making a connection between you and Mehul Choksi. I mean, just give us a sense of.
I'm clarifying that nothing, no connection, nothing, and no question by any CBI agencies. I'm clarifying officially this.
Shifting focus to HCC, another stock that fell over 26% in trade today, the worst intraday fall in over a decade. Now, after auditors of its company group, that is Lavasa Corporation, raised significant doubts over the company's financial health, how serious are these observations that have been made, and what does it mean for the company going forward? Anisha joins us to take that story forward and what exactly the auditor's report has to say. Anisha.
Okay, HCC was down about in trade around 25%. That after the auditors raised red flag regarding one of the group companies, which is Lavasa Corporation. Now, to put things into perspective, Lavasa has been in SDR since 2017, has been a subsidiary of HCC. Now, as of end of Q2, HCC owned around 70% of Lavasa Corporation. They had been working on a debt restructuring deal to bring down the debt and convert it into equity and bring their stake down to around 35%. We have been hearing a lot from the management, but nothing really worked out. And now we hear from the auditors that they have raised red flag and they have some qualifications as far as Lavasa is concerned. First up, they say that they owe some amount to the lenders to the tune of around 2,000-3,000 odd crores, but they haven't got direct confirmation from the lenders, and that's the reason they cannot vouch for that outstanding number. Secondly, they mentioned that there is some capital work in progress worth around 1,200 crores that has been the carrying value in the book, but they again say that they have no way to confirm that carrying value, and hence they cannot vouch whether that 1,200 crores should appear as an asset in the company's book or not. And lastly, they also mentioned that the supervisory and financial control of the company is weak. Now, the other observations that they make is that the net worth of some of the subsidiaries has been fully or significantly eroded, as well as the liabilities exceeding the assets over 2,000 odd crores. The auditors also mentioned that because of all of this, there's material uncertainty about company's ability as a going concern, and that is evident in the numbers as well. Because if you look at the FY18 performance, the revenue came down from 610 crores to 159 crores, and the losses have expanded to over 600 crores versus a 160 crore number reported last year. So this clearly has been a pain point for HCC. They have clarified and said that they're working with the bankers, but as of now, no resolution. Back to you.